Amazon's been rated as one of my best nine stocks to buy here in 2025, and I've been paying closer attention to the company in recent weeks and recent months because it might be one of the next stocks that I buy. And so I'm really interested in learning more about the company. Recently, I bought two of the other top nine stocks I've rated as buys. I bought Nvidia most recently, and then Uber before that. Uber I have rated as my best stock to buy in 2025, and I've had it rated as the best stock all year long. And so, out of the remaining seven of the top nine stocks to buy, Amazon is up there as a potential for the next purchase I make. Now, I've been really impressed with how Amazon's management team has dealt with unprecedented circumstances over the previous 5 years. And I've been impressed with how the management team has improved processes to lower costs to serve customers. And so I'm going to dig through the company's latest 10Q statement, and I'm going to share with you the things I highlighted, the things that I noticed as really standout things about the company's performance that I found valuable to know about before I make a decision on when I'm going to buy Amazon stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So I have the 10Q statement pulled up here. This is page 30, and I'm getting my financial statements and conference call transcripts, etc., from finchat.io. There's a link in the description for a discount. I like how they aggregate all the company's financial statements, so I don't have to go through, dozens of websites to get all the information. I can get them all in one place. So the Amazon management team said that the increase in fulfillment cost in Q1 2025 compared to last year is primarily due to increased sales and investments in their fulfillment network. And this was partially offset by fulfillment network efficiencies. They went on to say that they seek to expand their fulfillment network to accommodate a greater selection and in-stock inventory level to meet anticipated shipment volumes from sales of their own products as well as sales by third parties for which we provide the fulfillment services. So I like that they're investing in this category because I see this as one of Amazon's greatest competitive advantages is the fulfillment and logistics network. They've spent hundreds of billions of dollars on this over previous decades, and they have a lot of data on the performance of these networks and a lot of learning in the performance of these networks. They've collected a lot of data. They've observed how this network operates and found ways to improve this network. Arguably, the only company that I see making similar progress in this category is Walmart. I don't see any other company in the world making this kind of progress and this kind of advantage in fulfillment and logistics. Amazon has turned this into a compelling reason for shoppers to go to Amazon. Isn't that one of the main reasons why you, if you're a shopper of Amazon, goes to Amazon is because the company delivers products to your doorstep relatively quickly. And also, they have millions and millions of items. So they have a great selection of inventory, the largest selection of inventory of any one platform in the world. And they're able to deliver most of that inventory to your doorstep within a couple of days if you're an Amazon Prime member. And so this is a great competitive advantage for the company. And I want to see them make this an even greater competitive advantage. So I like when companies invest in the categories they have advantages in and expanding those advantages because they clearly know what they're doing in this category. So for them to make themselves larger, being able to accept more inventory, being able to accept more third-party sellers, and being able to deliver those products to customers even faster, that just makes Amazon a more attractive place to shop. And if Amazon is a more attractive place to shop, then third-party sellers and brands are going to be more interested in placing their products on the Amazon website, and more businesses are going to be interested in advertising on the Amazon website, which then just feeds that positive virtuous cycle where there's hardly anyone in the world that can compete against Amazon in this category. As I mentioned, Walmart's doing a great job and they've been a standout in recent years. But other than Walmart, I don't see any other company being able to deliver this kind of value to customers. They also said that they expect spending in technology and infrastructure to increase over time as we continue to add employees and infrastructure. And this is the other category I like that they're investing in is the technology infrastructure. They've been spending tens of billions of dollars, if not hundreds of billions of dollars, in developing their data centers optimized for artificial intelligence. And demand for enterprises in this category keeps rising. So I like that Amazon is taking a strong position in this category as well. So Amazon's marketing costs are largely variable based on growth and changes in rates. What I take this to mean is that they have a lot of sales-based uh, incentives. Uh, what that could mean is, for example, if I wanted to, I could link books in the description of my videos, and then I can give you my top rated books that I've read and I like, and I can join as an affiliate of Amazon, and then every time one of you clicks that link to buy that book, I'll get a small commission on that sale. And that's a variable cost for Amazon because they only pay me if someone makes a purchase from that link. Otherwise, there is no payment. And so that's a variable expense. Variable expenses are less risky for companies like Amazon because they only have to pay when they make a sale. So it's not a big deal. They like to make that payment because it means they made a sale. Operating income increased from 15.3 billion in Q1 24 to 18.4 billion in Q1 25. And I especially like that operating income is more diversified now. A couple of years ago, a much larger percentage of its operating income was coming from the AWS segment alone, whereas the international and North American segments were, especially the international segment, was losing money, and the North America segment was not profitable every single quarter. Nowadays, you can see for the 3 months ended March 31st, the North America segment generated 5.8 billion in operating income and the international segment contributed a billion. So I like that the business has a more diversified profit contribution across its categories and is not so largely dependent on AWS for its operating income. So it's grown to a size and it's improved its processes to a degree that now it's generating profit from all three of its segments. And in fact, more than 50% of its operating income came from categories not named AWS. So that's been a positive for me, seeing the company deliver profitability on its three segments over these last few years. So very interesting stuff here from Amazon. I'm becoming more and more interested in this company. Some of my hesitations include how the business is going to adapt to these changes in tariff policy by President Donald Trump. I mentioned in the introduction, I've been encouraged by the management team's ability to work through unprecedented circumstances in the previous 5 years. So I'm relatively confident in the management team's ability to handle these changes. But that's just one thing. That's one thing I have on my mind here as I plan when to buy Amazon stock. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.